Hello guys, welcome to our channel. The videos we make on this channel focus largely around various types of investments like ASX stocks, US-based stocks, as well as cryptocurrencies such as Bitcoin or Ethereum. We analyze and look at various other analysts and figures in the space, look at how they are valuing investments, and analyze and predict ourselves.
I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend, or whether it's the 2 standard deviations oversold and the log regression channel of Bitcoin, or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. So that's the basic cycle. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend, and that becomes an extremely interesting time to focus on accumulating crypto. What also happens at the bottom of liquidity cycles is things blow up. Less money around means those worst borrowers and people who have abused capital tend to blow up. And we saw that starting in June in the crypto markets as the centralized finance part, the CeFi part of crypto blew up as credit became less available, and you start seeing who's swimming naked when the tide goes out. And there was a whole bunch of people swimming naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda. And that was something where it appears from what we know that Alameda went bust in June. And out of that, they tried to paper over the cracks with customer money to hide the issues, because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So what are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of, FTX having bought them and then can't fund them. But I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX, because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them, and they've got that assets trapped, which is a shitty situation for everybody involved. And I don't know how that resolves. I got caught out in MF Global myself. It was very similar. It took a while before we got our money back, but we got a big first tranche back. And then eventually over time, as the administrators and liquidators sorted it out, we got the rest back, but that took years. So that's one of the reasons I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance. And a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. People have been looking at Genesis, Jump, and the other market making firms. Is it possible? Well, they've all said no, but as we know, that means nothing in this world, because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards, if there is another sell-off, you want to start aggressively adding into it.
Before we continue, click that YouTube like button and subscribe to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring, and now let's continue.
Because the macro cycle is turning, and I think this is the final phase, the capitulation phase. And I've been around this market since 2013, and I've been through all of these, and I've seen all of them, and the sentiment is as shitty as I've ever seen it. A lot of money being caught in all of these kind of fake crypto, which is, they're centralized, they're opaque, they lend your money out in ways that you don't understand to give you a yield which you're grateful for until you realize that you've had open-ended risk on the back of it, which is one of the reasons I've said, please don't use yield. Staking yield is fine as long as you understand that your risk is the currency that you're staking in, which is Ethereum or Solana or whatever it is. That moves up and down. You're going to make or lose money according to that. But the yield is relatively safe because it's written into a smart contract. Yield otherwise, I don't like. I don't take it. I don't use it. Same with leverage. I don't like leverage. If you're going to use leverage, and people will come to me and say, well, you said you were leveraged long in Ethereum. I used call options that had 5% of my capital at risk, and I got a wrong bet, and I lost that 5% in the call options. Totally defined risk. So it's defined risk taking, and options are great for leverage like that. They're not easily available in crypto. Foreigners can use things like Deribit. Now, LedgerX, which was the US version, is all tied up in this bloody Sam Bankman-Fried mess. So I don't even know how that's going to work. And that's another issue for the hedge fund market. There's no option market unless you can trade offshore. So it's really complicated out there. But let's wait and see. But don't use leverage. If you do, use call options, but you still have a risk the exchange goes under and you might not get paid back even if you win. So just be careful with this stuff. Don't risk your life on it. And don't use yield unless it's staking yield and you understand you're taking the risk in the underlying protocol. So let's see how much longer it takes to play out. The answer is I don't know. Market could have rallied today, didn't. So, maybe we've got the other leg lower. I think people want lower. I think there's a lot less buyers around right now, again, because a lot of hedge funds have got their positions trapped. I run an asset management business that invests in hedge funds. We had one that got trapped. A few have had some of their balances trapped on FTX. So it doesn't look as systemic as I feared, but I don't know yet. So, but again, it's not that the hedge funds are going to go bust. It's just their capital gets frozen. So it's a bit weird.